10-year note yields remain stubbornly low, but they have made attempts to get back into that old range. Remember that 260 to 280 range we spent much of the first quarter hovering and trading at both ends of the spectrum. And since March FOMC, way back then, we pushed through. We haven't really seen any sort of aggressive move through 260. That would be the bottom half of that range. We've nudged up against it and failed. And right now that continues to happen as we saw yields decline a few basis points today. Not really anything to write home about. But I think ultimately the fact that we can't get back into that old range suggests that there is still some weariness out there. Maybe some buyers who are not quite sure of where all this is going to end. And I think that from a technical perspective, bonds may not be looking as bullish as they were a few weeks ago, but certainly there are buyers out there looking for deals, and I think that's one of the reasons why we continue to fail to get north of 260 yield. And if you look at market volatility, well, market volatility is on its way down. It has been for some time. We put in the lows about a week ago, the 1 month lows about a week ago, and we're not there yet, but we are still very low. And it's starting to mirror what we're seeing in the equity markets, with the VIX index going down to its lows as equities continue to do what they do best, and that's just rally, almost nearing new all-time highs. So I think right now with the equity sitting very precariously on the highs, you're going to see very cautious bond buyers out there when we do get to that 260 level, with the idea that if something happens in equities, there's going to be a mass exodus very quickly, at least in the short term, and a lot of that money will end up in the bond market, and you don't want to be the last one in. And I think so right now, volatility low, yields just struggling to find a momentum in either direction. And what do we have coming up? Well, we'll continue. We have some auctions. We have a 5 and 7 year auction this week still to come. We obviously are going to be watching earnings and some of the key names that are going to come across the tape, like Amazon. But ultimately, I think everything's forward looking to the May FOMC meeting next week, when, while we're not expecting any policy changes, we may hear about some possible verbal tweaks, nothing that's going to be put into action. And we do get a press conference, as we do at all FOMC meetings now. So we will hear from Chairman Powell about where he thinks things are going, how have the numbers been, maybe some of the international incidents that we've seen, whether it's something in the Middle East, Europe, the UK, the Brexit, whatever. I think and China always is a talking point, and I think that all those together could give us a little bit of clarity. I don't know if the market's going to see a big movement on what he says, unless it is earth-shattering. At this point right now, the market seems very content to sit here. But again, we haven't seen any real momentum in the bonds. We saw that push in yields down to the lows, and then we shot right back up, but now we're kind of spinning our tires. So market looking for a little direction here, not getting it really from the data, and we're certainly not trading off stocks at this point. So maybe the chairman can give us a nudge either back into that old range, which I think it would make the Fed very comfortable, or dare I say back to the lows if he has words of caution to the market. But right now, sitting in no man's land waiting for that nudge.